Hello guys, welcome to i-tutor Academy. In today's session, we will handle with the chapter 11 MMPC-003 factors affecting the balance of payments. The factors which affect the balance of payment are divided into two groups. First one is the factor affecting the current account and the factor affecting the capital account. We already discussed there is two balance or type of balance of payment, current and capital. And the factors affecting the current account may be affected by the following factors: the rate of inflation in the resident, that is domestic country, and national income, and import restriction by government, exchange rate, etc. The factors affecting the capital account are the capital movement across border are affected by the following factors. First one is imposition of tax by government on the income accumulated by the domestic investors who have invested in the foreign market. This will lead to lower outflow of capital. And the second is economic liberalization might have an impact on the capital account. An expected change in the exchange rate may affect the flow of capital as it tends to have an impact on the expected rate of return in the foreign investment. And next is changes in the interest rate in comparison to other countries may tend to affect capital flows across borders. And a higher domestic interest rate may lead to lower capital flows into the country, whereas the reduction in domestic interest rate may tend to have greater capital flow into the country. And the next one is balance of payment and the central bank. The central bank of all countries hold reserves of foreign currencies which they can use to finance the deficit in the current account. For instance, a country, say India, has a deficit in current account worth Rs 200 and a surplus in the capital account worth Rs 180. Then there is an overall BOP deficit of Rs 20. If the central bank, in this case RBI, intervenes, then it can meet the deficit by selling equivalent amount of foreign exchange to its importers for payment to foreign countries. However, in case of a capital account deficit, sales of foreign exchange by RBI may be required for foreign lending or repayment of foreign loan by the Indian residents. And next one is there should a current account deficit always be situation of alarm. In open economy, we know that there is an equation related to that. You just go through your Ignou study material, and how to finance the current account deficit also here. As discussed earlier, CAD may or may not be necessarily harmful for the economy. However, CAD can be financed through various capital inflows such as portfolio investment, external commercial borrowings, foreign direct investment, and NRI deposit. And there is trends in India's balance of payment in the case of India. Okay, during the first quarter of year 2020-2021, India witnessed a sharp decline in both its exports and import in line with the contraction in the global trade. Okay, so this will vary of budget and economy and import export, everything is dependent on this. And the decline in imports exceeds that of exports, which led to a smaller trade deficit of $9.8 billion compared to $49.2 billion in quarter 1 of 5-year 2019 to 20. And the trade deficit during April to December 2020-2021 was $57.5 billion compared to $125.9 billion in April-December 2019-20. So here is graphic representation also related to the composition of net service exports. So you just go through that. This is this based on the economic survey 2020-2021. Okay, so you just go through this graph also if you are expert in economics and all, and also you just follow the current financial year plan, budget, economic survey, etc., then you will clear the concept more easily. And This is about this chapter, balance of payment, and the summary is the balance of payment of countries summarize all payment transaction and received by individuals, firms and the government in a given time period. It has two major components, the current account and the capital account. We already discussed, and the current account transaction mainly include the net value of import and export of the country alongside the net transfer from abroad. The balance of payment can be in equilibrium only if the demand and supply of foreign exchange reserves are equal. When the inflow and outflow of foreign exchange reserve from the country are equal. And keywords are there. If you have any doubt on the any keywords, you just refer this keyword section of your Ignou material. Okay. And self-assessment questions. Define the balance of payment. Why is balance of payment important for a country, and what are the components of balance of payment? Brief explain. And when is the balance of payment said to be in equilibrium? What is the difference between the balance of trade and balance of payments? How does the central bank of country play a role in influencing the balance of payment? Do you think that a current account deficit is always a cause of alarm? How can it be financed? Can you elaborate on India's overall balance of payment situation during the 5-year plan 2017-18 and 2018-19? Okay, so this may vary upon the this year also. You just refer the current situation of the balance of payment rate, etc., and economy of the country. Okay, so you just try to answer all these questions. In between, if you have any doubts, you can just contact our contact number. Also, you can comment it on our comment box. We will contact you back. And for more videos on MPA, you just do like, share and subscribe our channel. Thank you so much for your support.
i-tutor ES presents Ignou MBA, complete syllabus coverage classes and individual semester base, subject coverage program for MBA students online and flexible sessions. For more details, contact 62382 17885.